Yes. Question 1-7. A large profit making company is considering the installation of a machine to process the waste produced by one of its existing manufacturing process to be converted into a marketable product. First, understand what is this all about. A company which is as of now in its manufacturing process generating some waste, and that waste they are planning to convert it to a usable product, kind of recycling project. For that, they will have to make an investment, and that product can be later sold. Right? Read. At present, the waste is removed by a contractor for disposal on payment by the company rupees 150 lakh per annum for next 4 years. Please underline 150 lakhs and underline next 4 years. What is this? Let's understand first. Read properly. At present, the waste is removed by contractor for disposal. As of now, the waste that is getting generated, you have signed a contract with another party. That person will come to your factory every day. He will take that waste and go. For that, company is paying 150 lakhs. Now the question is, why should we pay? If you do not pay, then how will you manage that scrap? Correct? In a small factory itself, every day you will have hundreds of kgs of scrap and waste generated. Bigger the unit, more will be the waste generated. And it is not easy for anybody to process that. You will have to have a separate unit, recycling unit, etc. As of now, we do not want to get into that headache of waste management. So we have signed a contract. That person will come every day. Think like this. He'll come in his lorry and take all the scrap generated in our factory and he'll go. After that, how he is managing, that is his headache. We are paying him 150 lakh every year. Now tell me, if we purchase a machine and decide to convert that waste to a marketable product, this 150 lakh can be saved. So this becomes a money saved if we decide to convert that waste into a marketable product. But tell me, I said we have already signed a contract with him, correct? Then we will have to cancel the contract. Continue. The contract can be terminated upon installation of the four-side machine on payment of a compensation of, underline, 90 lakh before the processing operation begins. Think and tell me. Should I take it as cash outflow in year 0 or year 1? Or is it every year that I'll have to pay this money? What is correct? I should take it in year 0. Yes, because the wording used is before processing begins. And I have to pay it only once, not every year. Basically, as of now, our arrangement is he will come and take the scrap and we will pay him 150 lakh every year. And this contract we have signed for 4 years. If we decide to convert that waste into a good product by ourselves, then we will not require his help and this contract we can cancel. Clear? But if we cancel, he will ask for some compensation and that number is 90 lakh and that we should pay in year 0 itself. Next line, this compensation is not allowed as a deduction for tax purpose. Tell me what is the effect of this line. You cannot debit this to P&L account. If you debit something to P&L, your profits will come down, tax will come down. And the question says this is not allowed for tax purpose. That means this should be taken as cash outflow after calculating taxes. Able to understand? That means this will not go to my CFAT calculation. This can go to my NPV table. In year 0, I take 90 lakh as outflow. I will not save taxes because of this. Following? Next one. The machine required for carrying out the processing will cost 600 lakh. Which machine is this? Which machine is this? We need to convert waste into a good product. For that, we need a machine that will cost us 600 lakh rupee. Normally, what do we do when we see these kind of adjustment? We take year 0 minus 600 lakh outflow. But read that 600 lakh will be financed by a loan repayable in 4 equal installments starting from end of year 1, which means we are not paying from our pocket minus 600 in year 0. We are taking a loan, and with loan we will purchase the machine. That means in year 0 there is no cash outflow. 600 will come from bank, same money will go for purchase of machine. But that loan will have to repay. Read the line, they said 4 equal installments. In Calci 600 lakh divided by 4 installments will be what? 150 lakhs. This you will have to pay at the end of year 1, 2, 3, 4. Correct? This will become your cash outflow, not in year 0, year 1, 2, 3, 4. But sir, loan should be with some interest also. Correct? Next line. The interest rate is 14% per annum. But I am thinking we should not do 600 lakh into 14% every year. Am I correct? Because every year we are even repaying some principal portion. In Calci, work out and tell me how much should be interest for first year. First year is full 600 lakh into 14%. Correct? 84 lakh. But second year, outstanding principal will not be 600. You would have repaid 150 principal. That means balance is 450. On that, you have to apply 14%. What's the number? 63. Next year will be again from 450, you take out 150 principal, 300 into, correct, 14%. And one more year, like this, 4 years, we'll have to calculate the interest and pay. All okay? Continue. At the end of fourth year, machine can be sold for 60 lakh rupee and cost of dismantling and removal will be 45 lakh rupee. That means net amount we will earn from sale of this scrap is only 15 lakh 15. Correct? This will be cash inflow in year 4. Continue. Sales and direct cost of the product emerging from waste processing for 4 years are given to you. All amounts are in lakhs. Year 1, 2, 3, 4. Sales, material consumption, wages, other expenses, factory overhead, depreciation as per income tax rule, they have already calculated. We don't have to do any working note for calculation of depreciation. That means almost all these numbers we can take as it is in our CFAT table. But we'll have to see if there are any adjustments to be considered. Read next. Important here. Initial stock of material required before commencement of the processing operation is 60 lakh underlined at the start of the year. What is this? They gave 3 hints to you actually. To be honest, it's too much of information. Read. First they said initial. Initial means beginning. Then they said before commencement. That means it is year 0. Then again they said at the start of the year. That means this should be considered as year 0. Right? Read once again. Initial stock of material required before commencing the processing operation is 60 at the start of the year. So I will count year 0, cash outflow 60. All okay? Is only material adjustment that I am doing. Continue. The stock level to be maintained at the end of year 1, 2, 3 will be 165 lakh. Read once again. They said you have to maintain the stock level of 165. You already have 60 stock with you. For 60 to become 165, in first year, you will have to additionally buy 105. Able to follow? Should we do anything in year 2 and year 3? No, because the wordings read properly. The stock level to be maintained at the end of year 2 and year 3 is also same 165. That means I do not have to do anything in year 2 and year 3. Anyway, project life is only 4 years. Read what did they say next. Stock at the end of year 4 will be nil. That means this entire 165 I will sell. And when I sell the stock, what happens to cash flow? There will be cash inflow. Everybody, I am writing in one more style. Focus on screen. This is my year 0, 1, 2, 3, 4. Read once again. What did they say? At the commencement point, year 0 itself, you need a stock of 60. That means my stock level should be here. That means year 0 cash outflow minus 60. Correct? And then they said end of year 1 stock level should be here, which is 165. For that to happen, I have to spend another 105. 60 will not become 165. I have to pay money and purchase stock. And then they said you have to maintain the stock in year 2 also, year 3 also. That means I am not going to buy anything extra, not even selling. But then they said stock balance at the end of fourth year should come to 0. That means entire 165 I can sell. Correct? Sir, one doubt. That means you are not consuming this material at all. No, I buy, I keep, and I sell. By the way, the regular material which you will be consuming is already given here 90, 120, 255, 255. Sir, then what is this raw material? If you read those three lines once again, you will get to know what happened in this. We started with minus 60, then we went to 165. That means we again spent another 105, and then we kept the balance there only for 2 years. And then we said we will make the stock balance 0. How to make stock balance 0? You sell it. That means the stock is a safety stock. You bought, you never used. Sir, should we not count this as cost in year 0, year 1, year 2? If you buy and keep and sell, how is it a cost? If I buy, I consume, that's a cost. Please understand, this material consumption is already given here separately. This is the stock that you bought and you kept with you. Sorry, you bought and you used. But this, observe the wording, initial stock before commencement, you need 60. Stock level should be maintained is 165. And stock at the end of fourth year will come down to 0. You bought it, you bought something more, you kept it with you, you waited, there was never a chance, no need of using. Then you thought, I will close the project, you will sell it. This is more like your working capital now. Think about it. This is more like a rental deposit. Year 0 you paid, nothing happened in 3 years. Fourth year you left the building, the money came back to you. Able to follow? This is not a cost. Many times I have told you in the past, I am repeating again. If I purchase, it's not a cost because I can return. But if I purchase and consume, that's when it becomes a cost because after that I cannot return. Correct? I bought from him, I can return. Where is it a cost? Or I bought it from him, I can sell it to somebody. How is it a cost? Once I put it inside the machine and start using it, that is when it becomes a cost. Consumption is the cost, purchase is not the cost. Able to follow? Sir, how will it impact my answer? It will not come to your PBDT or CFAT table because this is not a cost. But this will result in some cash inflow and cash outflow. Tell me, year 0 cash outflow, year 1 little extra cash outflow, year 2, year 3 no cash movement, year 4 cash inflow. This will all come in NPV table straight away. I bought, I kept, I sold. It's not a cost. It did not even go to factory. I kept it in warehouse and returned from there on. Continue. Now see this, important. The storage of raw material will utilize space which would otherwise have been rented out for rupees 30 lakhs per annum. This safety stock that I said, I'll have to buy and keep it somewhere. For that, I will use one room. As of now, that room is rented out to somebody and we are earning 30 lakhs rent. Now tell me in future what will happen? For this project, I will have to ask that tenant to vacate the building. I will be losing 30 lakh rupee rental income. When you said in first paragraph, sir, 150 lakh we will save. Money saved is money earned. Now tell me, money lost is like money paid. I repeat, what did we discuss here? Sir, if we cancel the contract, we can save 150 lakh that we are paying to this guy. And we said all money saving will be taken as inflow. Now tell me, to keep the stock, you'll be using one room. Read this once again. The storage of material will utilize space which would otherwise have been rented out for rupees 30 lakhs. That means as of now, I'm earning 30 lakh rental income. I'll have to ask that tenant to leave the building and go so that I can keep this stock. That means this becomes an opportunity cost. Actually, if you see from P&L angle, as of now, I'm earning 30. I'm paying tax. In future, that 30 I won't be earning. That means it becomes loss of income. If money saved is money earned, money lost is money paid. If you're taking this 150 lakh as a positive number, then this 30 should be taken as a negative number. Following. As of now, where is this 30 lakh going? Sir, it's a rental income. It's going to P&L. In future, in P&L, it will be zero. That means to that extent, my income will come down. If income comes down, profit comes down. Continue. Labor cost includes wage of 40 workers whose transfer to this process will reduce the idle time payment 45 lakh in first year, 30 lakh in second year. Again, labor cost I will not copy from the table. Because of this project, I am reducing some labor idle time, and that is 45 lakh in first year. That means in Calci, how much is labor payment in first year? 225. From that, you have to take out 45 and take only the net cost of labor. How much is 225 minus 45? 180. 180. Same way, second year, 225 minus 30, 195. And this is only for year 1 and 2. Year 3 and 4, I have to copy 255 and 300 as it is. Clear? Continue. Next one is a little confusing. Adjust. Factory overheads include apportionment of general factory overhead, except to the extent of insurance charges of 90 lakh rupee per annum payable on this venture. After that, tax rate, discount rate, that is okay. Read this again. Factory overheads include apportionment of general factory overhead except to the extent of insurance. Go to the table. How much is your factory overhead? 165. They are saying in that 90 lakh is insurance on this particular project. In Calci, then how much is balance? 165 minus 90? 75. What is this 75? Read. This number is apportionment of general factory overhead. Other than insurance, balance is to be taken as portion cost. What is this now? Please pay attention. Our factory as of now is this big. This is department 1, department 2, department 3, department 4. As of now, this area is unused. Total rent is say 10 lakh rupees. What happens in costing? Once I start doing a product in this department, which is our project, this rent will be shared among all the departments using area ratio. Correct? That means tell me, out of this 10 lakh, some number will come here also. Maybe this is 2 lakh, this is 4 lakh, this is 3 lakh, and this may be 1 lakh rupee. Now think and tell me, should I really consider this 1 lakh as my cost? And this place is where I will be doing my project, by the way. This place is where I will be doing my project. Should I consider this 1 lakh as my rental expense? Yes or no? I think it is no. The reason is, as of now, you are not doing anything. Is the total 10 lakh changing? Tomorrow, if you start using this area, will the rent go up or come down? That is why they said it is not an exclusively incurred cost. They said it is apportionment of general factory overhead. Rent is paid for the entire factory. You will be using one corner. That much of area occupied we will count and share the rent also. Now, whether I do the project or not, the rent is paid for that area also. Just think about it. As of now, in this academy, if I give a break to you, for me, tea and coffee is getting arranged by academy from outside. Office boy will go get the tea or coffee. That means academy is paying for that. They are thinking in second floor classroom there is some space. Yes, we will keep one coffee making machine or set up a small pantry and then make coffee in-house. Okay, now tell me, what are the costs that they should consider before deciding? Because if you are getting coffee from outside, it is 15 rupee. If it is cheaper, then only it's a good idea to do it in-house. Correct? Now tell me, how will you find out cost of making coffee or tea? So that machine setup. Okay. Machine depreciation, done. Some electricity bill, okay. Coffee powder, tea powder, sugar, milk, some maintenance repair, correct? All of this divided by number of coffees. Should I take rent of that area also? That's exactly what I'm trying to say. That rent will be there in costing. What will you do now, sir? Second floor is not only class, sir. One service department is there. This is what we did in costing. P1, P2, P3. Sir, this is P1 classroom, but this is S1. Now total rent of this room is 1 lakh rupee. Area occupied is 90 is to 10. There will be some rent. In costing, you will share some rent even for that pantry, the kitchen area. But in reality, we are now also paying rent for that area. No one is using that area. This is the meaning of apportioned general factory overhead. But tell me, why did you say we should take machine setup cost, machine depreciation, electricity, coffee powder, tea powder? These are all exclusively incurred for that tea making unit. Correct? Read once again. They said it includes apportionment of general factory overhead except to the extent of insurance of 90, which is for this venture. That means insurance I have to count. But other than insurance, whatever 75 number you said, this is irrelevant. Whether I do this project or not, whether Yashas Academy decides to do tea here or not, rent of that area is not going to change. Able to follow everybody? Tax rate is 30%, discount rate is same as rate of interest. How much was rate of interest, sir? 14%. That itself is your discounting factor. Advise the management on desirability of installing the machine for processing the waste. All calculations should form part of the answer. That means NPV method. When question is silent, I told you this the other day also. All decisions are first done on NPV basis. That means we'll have to use NPV as the technique to decide whether this is a good project or not. Since there is so much of data in the question, my suggestion is, as and when we take an item, you start taking, so we don't end up reading same thing again and again, and we should not miss out also from first para till last para. So many numbers in between. Start heading computation of CF8. Normally we do depreciation calculation first, but in this question they have done in question itself. Depreciation is under income tax rule and that number is already available. Working note 1, computation of CF80. Slightly bigger column for particulars and then year 1, 2, 3, 4. Yes. Normally we start from PBDT if it is available. Otherwise, we have to start from sales. And they have given all the items in one table. Start from sales. 966, 1254, 125. From this I minus material consumption 90, 120, 255, 255. Next, wages. But I will not be copying the number as it is because there was some saving in idle time. That means I should be taking 225 minus the saving. Yes. I'm marking it here. 225 minus 45 lakh. What's the number? 180. 19 192 195 195. This saving is there only for year 1 and 2. Next 2 years we have to copy as it is. 255 300. Yes. Next, other expenses. No adjustments in this. 120 135 162 210. After this, factory overheads, but we will take only insurance, correct? Because other than insurance, we discussed it's all the general factory overhead that got apportioned. How much is insurance number every year? 90. That is per annum, so I can take it every year. Next, depreciation. As per Income Tax Act, they have mentioned 150 114. Yes. Do not do PBT calculation. There are many more things to be taken before you go there. You still have to read from top. Everybody. First paragraph, they said, at present, the waste is removed by a contractor for disposal on payment by company rupees 150 lakh, and this is per annum for next 4 years. If we start this project, this 150 lakh we will save, correct? And we have already learnt in couple of other questions, money saved is always taken as money earned. That means this should be added. Take add savings on cancellation of contract, positive number, we will save 150 lakhs per annum. Now even that adjustment you can tick. But same para they also said you have to pay compensation, correct? But that I can't take here, because whatever I write here will finally give me PBT, and on that I have to pay taxes. And that line, that para ends with this sentence saying it is not allowed in tax. That means I can't take it now. So that is still pending. We'll come back to that later. Coming to second para now. They said to buy this machine you need 600 lakh, but that 600 lakh we are not paying. That will come through bank loan. Now this bank loan will have to repay. How are we repaying? 4 equal installments. That means in calci 600 by 4, 150 lakhs. I have one serious doubt. Can I take 150 lakh here? No. No. Interest I'll take separately. Can I do both? Principal repayment and interest payment? Think and answer. Can I debit principal and interest? Have you ever debited principal to P&L account? Interest can I debit? Then where will this principal be taken? NPV table as cash outflow. When you take loan, principal is not to be debited to P&L. Remember, capital receipt, repayment of a capital receipt. Why will you take? Loan taken is not income. That means loan repaid is not an expense. Same way, interest can be taken, but principal cannot be taken. That means next thing to be done is minus interest on loan. But this we don't have number directly. We will have to calculate, leave about 8 lines from here, 8 to 9 lines, and then working note 1. Interest on loan, line by line. First year, we will be paying 150 lakhs of principal money, correct? But that payment will happen at the end of the year. That means for the year we will have to pay interest on full 600 lakh. Understand, we are not paying principal portion on first day. If we had paid first day, then first year interest itself would be on 450. But we used full 600 for 1 year. Second year, since we have repaid 150 principal, my opening balance of loan will be only 450 lakhs. This into 14% will be 60. And fourth year, only on 150 I'll have to pay 21 lakh. Yes. Can I debit interest to my P&L? Yes. Therefore, this will be taken here. 84, 63, 42, 20. Done. Continue. Interest portion is done. Scrap value will not be taken here. Am I correct? Scrap income will be taken in NPV table in last year. Okay. After that, sir, this entire table we have picked. Nothing to read again. After this, initial stock is 60 lakh. That will become 165. It will become zero. I've already explained this. This is not a cost. You are not consuming the stock. You are buying, keeping, and returning. So this will come in my NPV as inflow and outflow, but this is not a cost. Next one. The storage of material will utilize space which would otherwise have been rented out for 30 lakh. Now tell me, this 30 lakh income we will not earn in future. That means this is a loss of income. Correct? If money saved is added as income, money lost should be deducted. Loss of rental income. Or think from your P&L logic. As of now, we are having a credit in our P&L. 30 lakh, 30 lakh, 30 lakh, 30 lakh. But if we take up this project, that 30 lakh won't happen. And if credit side comes down, your net profit will come down. Correct? 30 lakh rupee per annum. Next. Factory overhead includes apportionment of general. This insurance, I think we took already. Have we taken insurance 90 lakh? Hello? In answer, we have taken. Done. Tax rate 30%. Finally, we reached profit before PBT. Anybody? 372. Third one. Second is, this is correct. Third year 4. Please check. PBT numbers are okay. Yes. What is the tax rate? 30%. You can do a slight rounding off. Totally okay. 372 into 30%. Triple one. Do it and tell me the numbers. 110.7. 145.8. 130.5. This will give you profit after taxes. If you round off, totally okay. Anyone? PAT 260. I'm rounding it off. 340. Now we have to add back depreciation. Anyone? 410. Please check. CF80 numbers are correct. Using CF80, we will have to now prepare NPV table. But NPV table, in every year, there are so many things now. Loan repayment, scrap income, stock, extra and less. Therefore, I am just converting rows into columns and columns into rows. Okay. It will make it easy for us to do. Allow me to do. No one will copy now. I'll tell you after few lines you can start copying. Calculation of NPV. This is the plan. Particulars. And I'm doing year 0, 1, 2, 3, 4 this way. And then all the plus minuses we will do. And then we multiply it with the discounting factor. And here we will do DCF 80. Correct? And then finally I will have the NPV. This is better because there are so many things to be adjusted. Now you can start. Everyone, heading calculation of NPV. You know the overall presentation now. Instead of 0, 1, 2, 3, 4, I am writing this way, column wise 0, 1, 2, 3, 4. Yes. Let's start from first paragraph. Everyone, what do we have in first paragraph? Two numbers. First one is 150 lakh that we are going to save. I think this is already taken in our CFAT table. Am I correct? But after that, the compensation to be paid, this was not taken. Now read that sentence and tell me, should I take it in year 0 or year 1? It says clearly it has to be paid before processing operation begins. Correct? Therefore, start now. First, compensation to contractor minus 90. Should I pay him every year? No. Done. In this para, the other number 150 lakh is already taken. Next. Machine required for carrying out the processing is 600 lakh and this should be financed by loan. That means year 0 I am not going to take minus 600 because it was not my money. Bank loan I took, same money I paid. Correct? But this we have to repay in 4 equal installment. We have already done this discussion. We'll be repaying 150, 150. Tell me year 0 onwards or year 1 onwards? Because the EMI will start from end of the year. Correct? So repayment of loan, nothing in year 0. Correct? We will pay 150 at the end of year 1, 2, 3, 4. Next, they said interest rate is 14%. I think we have already taken interest in our answer. Next, end of 4th year, machine can be sold for 60 lakh and dismantling itself will cost us 45 lakh. That means net scrap income is only 15 lakh. This has to be taken here. Scrap value only last year. Correct? Scrap value is the inflow at the end of the project. Next. Sales and direct cost of the product emerging from waste. This entire table we have taken in our CF80. Copy those numbers now. CF80 working note above. How much is our inflow? 410, 372, 424, 367. Correct? Even in a regular NPV sum, this is what we used to do. Year 0 outflow, year 1, 2, 3, 4, copy from the CF80 working note. Since that it is slightly bigger, I am reading from question and going in that flow. Done, sir. This whole table is taken now. Next. This we have to adjust now. Initial stock of material required before commencement of the processing operation is 60 lakh at the start of the year. This is safety stock. Year 0 itself I have to pay 60 lakh from my pocket. It's a minus 60. Correct? And then they said the stock level to be maintained at the end of year 1 to 3 will be 165. That means at the end of year 1 itself it should reach 165. From 60, for that to become 165, I have to pay another 105. Correct? Because we already have 60 when we started our factory, our project. It should become 165. That means another 105 I have to do. But nothing to be done here and here because they said you have to just maintain there. No buying, no selling. Correct? And then continue the line. Stock value at the end of 4th year will be nil. That means entire 165 you will sell it. They did not say you will sell it at some profit or loss. Therefore, I don't know the sale price. I'm assuming that it is sold at the price at which we have bought. Done. Once the solution is done, for this adjustment, I will dictate a proper class note because it is difficult to understand if we write like this. I explained it initially with this. I'll dictate this once our main answer is done. Okay. Chalo, where are we? Safety stock adjustment done. Next. The storage of material will utilize the space. I think this 30 lakh loss of income we have taken. Next, idle time adjustment is over. factory overhead, insurance is done, tax is already paid. Now only thing left out is discount. That means this will now be my CFAT figures, correct? And then I will multiply this with discounting factor at 14%. Anyone? Year 0 minus 150, 165, 155, sorry, triple two, 274, 397. All positives. This should be multiplied with discounting factor. They said discount rate is same as rate of interest. That means it is 14%. 1 divided by 1.14. Anyone? Point 877, 769, 674, 59. Recheck last number. 592 is correct. Sure. This will be DCF8, discounted cash flows after tax, minus 150. You can round off and tell me. 136 I can take. 171, 185, 230, positive 576 or 577. That is because of the rounding off difference. Don't worry. 575 is also okay. I just shifted rows into columns because we had too many things to write. We could have done it year 0, 1, 2, 3 and there itself do all the plus minus. But then if we only do plus minus, we'll not know what that is. Today we will know. Our own notes we won't understand after 3 months. That's why I shifted all rows to columns. Now tell me NPV is positive. So this is a good project. One line. Conclusion. Since NPV is positive, comma, project is worth accepting. Since NPV is positive, project is worth accepting. Yes, I want you to write class note. This is not for exam purpose. This is only for your understanding purpose. Okay. Class note on safety stock. This is one common doubt many students have. Why is it not taken in CFAT? Why is it taken only in NPV? Answer is simple. You never consumed it. You bought, you kept, you sold it back or sent it back. Where is the question of consumption? Correct? So draw this year 0, year 1, 2, 3, 4. Somewhere here is 60 and here is 165. Just for understanding purpose. Yes. What did they say in question? Year 0 itself, you have to arrange 60. That means here itself is minus 60 should happen, correct? But end of year 1, it should reach 165 That means another 105 should be the cash outflow. All okay? And then they said you have to maintain this 165 in year 2 and year 3. That means no cash outflow, no cash inflow. Finally, end of year 4, they said stock balance should come to 0. That means you will be selling entire inventory or returning. Returning may not be possible because after 4 years, your supplier may not take the item back. So at least you can sell it. But price is not given. I am assuming that it is sold at same number. Done. This is one thing. Second class note. Listen before you write. We took only insurance in that factory overhead. Why we did not take other than insurance factory overhead portion? Because they said it is apportioned general cost. That means whether you take up this project or not, that general factory overheads are not going to change. It even includes the salary of the factory gatekeeper. Because you're doing one more activity now, that waste to marketable product, they will share in some ratio. Like the canteen also we shared some rent. But whether you do that project or not, the general factory expenses like rent, building maintenance, even the factory security guard salary, those are not going to get affected whether you do this project or not. That's why they are irrelevant and hence we have not taken. This you just write as a class note. Start writing. Other than insurance, comma, other than insurance, comma, the factory overheads, the factory overheads are irrelevant. The factory overheads are irrelevant since since they are general in nature, since they are general in nature, in bracket, will not get impacted, in bracket, will not get impacted by our decision, will not get impacted by our decision. Close the bracket, full stop. That's it. Why insurance I took? Because read in that para, they said insurance is paid on this venture. Maybe you are buying that 600 lakh worth machine, that machine insurance. Now, if you do this project, then only machine. If you buy that machine, then only insurance. That means this is a cost for the project. But the general rent should not be considered because it will anyway be there. Done. Conclusion written. Perfect. End of the answer.